From Music City, Nashville, Tennessee, this is our inspirational, keenly awaited, highly anticipated edition of The Trading Floor with your humble hosts, Jeremy, Alexander Newsom, and Angie Barbosa, with a daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. Had some newer music coming on before the break. Hope you guys enjoyed it. Some 2014 action. I haven't had any amazing 2015 action yet, but I'll come in. I'm sure there'll be some good music out there soon. So today's Tech Giant Tuesday, a lot to look at, and the last 10 minutes of the market or so, we'll look at what's gapping for tomorrow, because there is a lot of things out there gapping tomorrow. But of course, as always, let's look at the general market, and then we'll take a sneak peek at Apple. And it's really, really fascinating. Just yesterday, as you guys recall, we had a bullish entry. I had a bullish entry. I want to close above yesterday's candle. Bullish, right? Well, today's candle, and really kind of yesterday's candle as well, these are some wicked pair candle sets, which is when you get two black candles in a row, and the second black candle opens above the close of the prior day and fills the low of the prior day. So today's kind of some bearish candles, and my overall thought process is that we have some highs and some lows. So something that looks a little bit like this, some type of descending triangle. And again, our thought process was that 2015 could be a little bit bearish, coming into the move. So there is a good opportunity tomorrow, I think, for some bearish positions potentially, and maybe also on Thursday. You can see that we had a really gorgeous evening star reversal pattern on the SPY. Catherine Zwick got herself into some puts, and it started making some lower lows. And at the moment, in a way, on an hourly, this almost looks like a very interesting double top. And the fact that we're kind of below here and retesting right now on the hourly, and here's the 15-minute chart. I mean, just a beautiful, beautiful kind of a rollover. We're going to see for the next, I guess, hour or two, maybe until tomorrow. We'll see how this retest holds out. But I will be keeping an eye on an hourly and the 15-minute chart tomorrow for some additional bearish action. And what I'm looking for is some retests on the hourly. So let me just go ahead and kind of draw that for you. So this is kind of what I'm anticipating. I don't know exactly how it's going to play out, but obviously I'm anticipating a little bit of a retest action sometime tomorrow. Maybe we break tomorrow. Maybe we break Friday. But a little bit of retest, and then some potential rollover action to be expected, something like that. Maybe, at least more than likely. That's my thought on SPY. DIA, very similar. DIA, we had a very, very bullish gap in the morning. I was actually quite bullish on the market in the morning, but obviously, we had a close here. We wanted an end of day trigger close, and about an hour or so ago, we took that trigger off because we got such a bearish candle today on the DIA. So keep an eye out for some moves to happen, right? If you start getting into some protective puts, this is very, very relevant. I'm all about buying the bounce, but I'm expecting a lower low. So I'm expecting us to come down and either break this support or this support, make a lower low, and then this is kind of around the area where we'll start buying the bounce on the market, kind of the later part of January. But we'll see. So tomorrow, if we gap down, ladies and gentlemen, let's say we gap down, what would be the better play? If we gap down to green or if we gap down to pink? What will be the better gap on the market, in your opinion? And the answer is green. Yeah, absolutely. Blue would just kind of be a no-brainer. I heavily doubt we'll gap down 4%, but you never know. Green would be the best gap because we're clearing that pivot, and it would be a retest. So I do expect and anticipate the market to retest a little tomorrow. We really even could get an inside day candle, like a gap up tomorrow, and then kind of a potential rollover Thursday, Friday, potentially. So as I've been saying for a little bit, we expected the bounce. Here's the bounce, and we got a good bounce today, but a lot of selling pressure came in. Doesn't look like the bounce is going to hold up, and I am now slightly more bearish than bullish, expecting a little bit of a retracement in the market. And you can see the Qs really shaping up with those candles as well. So the Qs, if we close below here tomorrow, which is approximately 99.96. So let's say we do this tomorrow. Would you wait for a retest before you do swing trade bearish? Yes or no? And the answer is yeah. I think we should, because we have 4 black candles in a row. So if we close below those support levels tomorrow, Thursday, Friday, wait for that retest and that failure before we start taking some swing trades, a little bit more bearish than bullish on the market. Jeremy said, what happened around 10:17? Back in here, there was a little bit of FOMC meeting, but that was really just the bounce that we were anticipating. That was the rest of the Santa Claus rally. So here was your Santa Claus rally right there, mid October to December, and yeah, that was really all that was. So James mentioned some of this was the Ebola scare. So here's your Ebola scare type thing. Here was your Santa Claus rally. Here's your 2015 selling, with taxes and things like that. And I'm still anticipating some lows and a bounce to kind of come in out of this. So it'll be really, really interesting to see how and if that plays out. IWM, same exact thing, ladies and gentlemen. There are some bearish candles shaping up. We'll probably gap down tomorrow, maybe, and it will be a retest gap if it happens. But again, the market doesn't have to roll over. I am still bullish. This is a distribution phase on pretty much all the indices. So if we gap down tomorrow, we could get a bullish candle towards the end of the day. We could get a candle that looks like this if we gap down tomorrow, depending on how big we gap down. So don't think the market has to roll over here, because it doesn't. It is in a good, healthy location. We are selling. We are getting some momentum. And I think what Brad Reed noticed back when he was kind of taking my place last week was that there is some really, really good MACD divergence on the DIA. So, here's your divergence, very, very obvious on the daily chart. So this is the momentum that's waning. So if we begin to trade sideways tomorrow's going to be a good day, weekly Wednesday. It's going to be fun. We're going to be getting into a lot of weekly spreads as far as our analysis goes. So keep that in mind. Orkin's back. What's up, buddy? Been talking about you all day, man. We missed you. And right out the gate with Office Depot. I promise I talked about Office Depot earlier and even mentioned your name. So I'll go back and look at that some point later today. So glad to have you here. Joe Wolf, how you doing, Joe? Glad to have you here as well. Appreciate you being here for Tech Tuesday. Okay, so let's go look at Apple. Let's take a peek at Apple and see what we got. So Apple is very, very interesting at the moment. Very interesting. There's a lot going on with Apple. We had a really good gap this morning. And here's your evening star reversal pattern. There was the failure right there. So right about 1:11. And that's when we first started pulling up the trading floor and we were looking at Apple. And I was literally about 25 seconds too late to place the trigger for that trade. But man, that was just a beautiful, beautiful entry. I mean, we were looking at the 15-minute chart on Apple. I just really did not have the time to pull the trigger. But at the time, it was looking like this. It was going to be the bearish entry, and our stop was going to be right there. And that would have been a phenomenal play. But regardless, we can recognize the opportunity. So on Apple, what to expect from here? Well, my thoughts are, if we go back to the hourly, we have some really, really interesting candles shaping up at the moment. Kind of like this movement. Is a retest gap. We have fully retested, and we might get a morning star reversal on the hourly and, truthfully, continue back up. That is very, very possible. If 108.42 on Apple, I would be slightly more bearish than bullish, and we'd start more than likely trading back down, making some lower lows, and probably getting much, much closer to the 103.65 region, and maybe even the 100 simple moving average is probably target number 1. And then maybe even as far as 103.65 and potentially maybe as far as the 200. But we do have some lower highs. So there's a chance that Apple could be forming some type of interesting descending triangle on a bigger picture, or maybe it's just in some type of downward channel like this and looks like it might kind of roll over and continue a little bit lower. So I have a 114 covered call. If we get below 108.42, tomorrow, I'm going to exit my long position. I'm going to hold on to my call, which expires this week. It will be a naked call. And I'm going to add to some of my protective puts that I have if we get below 108.42 on Apple. 103.65 would kind of be a target at that point if we start breaking some of those lows. But again, tomorrow, there is also the chance that we could get a little bit of a bullish candle and really just kind of start slowly moving bullish. So it'll be interesting. Judy says, what do you think will be likely with earnings around the corner? My honest thought process on Apple is that, yeah, it'll probably make a little bit of a lower low if we break 108.42. And on earnings, it'll probably gap up off that support. That's kind of my guess. That would make sense to me. Number two. Go ahead, Ange.
Hey, Jeremy.
Yes, the
Jay's
divergence
question,
is bearish that
with
we're getting
earnings
on the
around the
market.
corner
It's
was
bearish
tied to her
divergence, which
previous
means that the
question
momentum
about
is going to
MACD
be very,
divergence.
very impeded. So it's going to be slower momentum, not necessarily on every single stock, but just kind of the market in general. I don't know if Apple has MACD divergence or not. I don't think it does, no. So MACD made a higher high on the stock and made a higher high on divergence on MACD. So everything is okay as far as Apple is concerned. But, we're in a distribution phase. That was kind of what we anticipated. We anticipated some sideways volatility right here. So if we do make it down to this area on Apple, buy low, sell high. We're in a distribution phase. This could be some type of wave 4, maybe bigger picture. And if we start bouncing, we'll see. But right now, my protective put has triggered. I'm in a collar on Apple and wait and see what happens. Judy says that area is $100-ish. 103.65 to be exact is what I have on Apple. Any more questions, concerns, or thoughts? Oliver said, if you do a trend line from the all-time high and join the 3 peaks, it makes sense. Yep, there's some lower highs coming in right there for sure. So at the moment, we got a candle today with kind of an upper wick and kind of a lower wick. So I'm kind of anticipating some bouncing tomorrow on Apple, but this gap hasn't filled. I think that's a very, very strong sentiment, and we could continue to kind of trade sideways in here for sure. Tina, yes, today's black candle is also an inside day candle. That is absolutely correct. Correctamundo. So I'll look at JCPenney and Sprint a little bit more in just a moment, and Office Depot. But let's go look at a few other of the tech stocks. So let's go look at Amazon. Amazon, the only play I have for Amazon at the moment is a potential analysis for a bull put spread. That's all I've got. Very, very good support. And I've mentioned this a few times, but it's really interesting on a lot of the big name stocks how we're at such a pivotal support on them. So Amazon, Netflix, Priceline, Google, this is a huge, strong support on Amazon. And with earnings coming around the corner, if we gap up from there or gap below from there, this is going to give us a lot of opportunities. A lot of opportunities. So being that we're above this support line, if it does indeed bounce, that'd be great. But that's the only analysis that I have on Amazon. I mean, it's trading sideways. There's not a lot going on. So if you're in a bear call spread or a bull put spread or both, that's really the most neutral thing that I have on Amazon. Any questions on Amazon, guys? Thoughts on that? All right. We'll see what happens on earnings. I mean, again, earnings is on the 29th. That's about 2 weeks away. So if you're looking at a spread, just make sure your spread expires before earnings. Amazon, done. Let's go look at Google. And let me kind of show you what I'm referring to on Google, referring to that long trend. Here's your weekly chart. And again, on Google, very, very, very strong support at 487 and some change. You can see that is kind of the gap from way back when. So very, very good gap. And we're kind of forming a Morningstar reversal pattern on Google at the moment. So again, very interesting to see how it plays out. Today's gap was bullish in the morning. And there's a lot of bullish sentiment on a lot of stocks, and it was a retest gap. And truth be told, we did retest, ladies and gentlemen. So you can see on Google, boom, boom, and we're starting to get some buying action. So if we do bounce, that would not shock me. It would not surprise me if we start going bullish. In my opinion, the market in a general primary trend is obviously bullish, and a bullish continuation higher makes a lot of sense on a lot of stocks. But since earnings is coming around the corner on so many trades, I think it's very interesting how so many of them are at such a hugely strong support, along with Netflix. Right? Netflix, you have that 310 area. It's very, very good support. Robert, you're in that bull put spread that is expiring this week. So today's Tuesday. I like the candle that we got today for you. I like it. If we come into the hourly on Netflix, again, you can see that this was a pretty good gap. You had some black candles on Netflix. It gapped up nicely, traded back down. Now we're getting a little bit of buying candles coming in. So, the gap on a lot of things should hold. And if it doesn't, that's going to be bearish. Bottom line, if it doesn't fill, if it does fill, so if we start getting a lot of this tomorrow, that's going to be bearish, guys. Forces, I do not understand the Monsanto Iron Condor triggers. Those are the triggers for knowing when to unravel the spreads forward. Jay said, so to recap, Netflix didn't fill, so it's more bullish. That is correct. That is correct. So this is a good gap. Pat Coffin's 310 put hopefully will expire tomorrow. So yes, if these gaps do not bounce tomorrow, that's a bullish signal because today's gap this morning was bullish. If we start taking out these lows and do not continue to bounce and we fill these gaps that we got today on pretty much every single stock, that is bearish. That is bearish. So there's Netflix, Baidu, kind of similar. So there were a lot of stocks like Baidu and Tesla that did fill their gaps. And that's why it's very, very interesting to me, SPY, DIA, a lot of gaps got filled. So these gaps might not be as, might not hold out. And I think we're going to find out in the next 2 or 3 days. Baidu, I'm a little bit more bearish than bullish if we close below 215.32. Here's your potential 2 or 3 month bullish perspective, mentioning that we have this little accumulation phase kind of going on. Here's your distribution. Here's your public participation. Let's see what we do on Baidu. Here's your long-term moving averages. We're below the 100 now. We're below this really, really good resistance. And if we close below 215.32, I'm going to be very, very excited to see if Baidu continues more bearish than bullish. Price line, very similar. So when I say similar, I mean it's similar because it's at a very, very good support level. We got the gap up today. If you come to a weekly chart, here's what price line looks like on a weekly. Weekly, you're below the 100 simple moving average like Google. That is a bearish signal. This is the 100 on a weekly chart, ladies and gentlemen. On a weekly. So we start closing below here. I mean, that is at least to have a little bit more of a bearish than a bullish perspective, which is about 1017.51 on price line. So just kind of below the wicks of those candles. And, the fact that we're below the 100, we're below the 200, we closed below this pretty bullish candle yesterday. It's going to be interesting. This is interesting. So there's kind of price line. Any other, let's go look at Facebook for sure. Facebook also had a very nice bullish candle earlier this morning, and there's a lot of bullishness in the market this morning. I think if we start taking out some of these lows on Facebook, I think we do pull back down to the 72 price range, which would be a good buying location. As you guys noticed on this little documentation right here, Facebook is better for just owning shares at the moment and doing covered calls because we are trading sideways. Let's take Facebook from July of 2014 and draw a line. Look at it, ladies and gentlemen. That is the definition of sideways. The definition. So any strategy that you're playing, make sure it is a sideways type of strategy. There is some strong support down at the 200. If we make it down to the 200, I think a lot of people will be buying Facebook. So we'll see how and if that does indeed play out. But again, we're smack in the middle of this channel, and if we start making some lower lows, depending on what type of gaps we get on the market tomorrow, it could be a fun day. Robert wants to look at LinkedIn. All right, LNKD, that's a tech stock, so we'll hop over to LinkedIn really quick. LinkedIn, we had a bull put spread down here that has expired worthless, so we can get that analysis off the table. I still kind of see that sideways, not really exciting analysis on LinkedIn. This is an interesting little gap. If anything, I'd be excited to do a bear call spread up here. 245 and some change. Let's see if there's any premium in there. And then I'll go verify earnings. I think usually LinkedIn comes out kind of late. Can you check on that, Ange? Angie. All right. This is February week 1. And Ford, I'll look at Monsanto again just a little bit for you, brother.
Yeah.
It looks like it's after whatever I'm looking at now. Yep. I was looking at February week 1. I'm like, this is definitely after where I'm looking at.
February 5th, after close.
245, 247.50. If you got a good bid-ask spread for that, that's really not too shabby on LinkedIn. 245, yeah, that's good. 245, 247.50. The bid-ask spread's kind of large. You could easily get 25 cents for that, maybe even a little bit more. 25 cents is 10% return. January week 5. 245, 247.50. Bear call spread. Jan week 5. Is it week 5 or week 4? This is a week 3. Let me check. 3, 4, 5 is week 5. Okay, week 5. Let's do 35 cent limit. I can dig that. I mean, that's above resistance. What do you think, Angie? You're the spread master. And we would know, Ford, that we wouldn't even have to worry about that spread, concern ourselves, or entertain the fact that it might be a bad spread unless we close above 244.14. I think I'm going to write that down for tomorrow. Because I like that. There's my trading plan. Where's my trades? We're above the slow-moving averages, that's why I might leg into an iron condor.
So where are the slow-moving averages on that?
So we got the bear call spread here, and the bull put spread. Mm-hmm. Yeah, if we do a little bit of this action and start bouncing, might also be able to hop into an iron condor.
Sideways
maybe.
For so long.
All right. Real life trades 2015. Angie, give me the go ahead. Let me write this one down.
I'm okay with that.
LNKD 245, 247.50 bear call spread, 35-cent limit, Jan week 5. I'll probably confirm earnings a little bit more, but I can dig that trade. I'll publish this idea. Bear call spread on LNKD. Short tags LNKD. Real life trading. Credit spread. There we go. Sideways could consider a bull put spread to complete the iron condor if we bounce. Okay.
No, they're not on the website, Jay. They are on TradingView. So if you have a TradingView, even a free TradingView login, you can follow real life trading and see them the second they're updated. It's free and it's super easy. And we have a video that shows you how to follow us. I actually get emails every single time Jeremy says.
And I will send you the video right now.
I get an email so you can see the chart instantly.
Orkin.
Hey, friend.
I'm gonna get all of your questions, Orkin. Don't
I love
worry.
it how y'all take care of
You
each
threw
other.
3 at me.
Pat's telling us, don't miss Orkin's question. And
Nah, you're fine, man.
I know, I know.
just
I
gotta
love
get
it. Orkin says,
through some text.
last
We got 30
question,
minutes,
I
guys.
promise.
30 minutes.
I hope not,
Good
Orkin.
to go. So since we're talking about spreads and condors, I'll hop over to Monsanto really quick. And Ford, these are just my triggers that kind of knows something's going on, right? If Monsanto closes above 123 or closes below 114.65, you need to start managing your risk and unraveling or exiting depending on how much time we have left. But other than that, we don't have to worry about, we're not worrying about Monsanto. Unless it does something, unless it touches one of those prices, I'm not gonna even worry about it. So those are just the prices that let me know that the spread might be in trouble and then I need to do something. Yes, trigger EOD, end of day. That is correct. So it has to close below or above those prices. All right. Any other tech stocks you guys want to look at before I look at a few other things? We didn't really have any. I didn't actually have any day trades that I took today in the afternoon session. You guys called out a few trades that we set up, but most of the trades, everything got in there. Tesla and Alibaba, yes, sure, totally. Tesla, we're still in, Jay. I moved the stop officially down to 209.34. So if you're in the trade bearish from this pennant pattern break that we talked about back on January 9th, move the stop to break even to 209.34. 194 is kind of our next target. This bear call spread looks like it should expire just fine if you got into it. And really at the moment on Tesla, that's kind of it. What my goal on Tesla is for Tesla to hopefully trade down to this level and trade sideways a little bit and then continue to roll over. Because our exponential moving averages, we've made on a primary trend. Okay? Primary trend, meaning over 3 months, we've made lower highs. So we have a high, a lower high, and now we've made a lower high. The trend is really starting to shape up to be more bearish than bullish. So unless we close below 191.69 tomorrow, my hope is that Tesla hangs out here, rests, and then closes, and that could give us some really, really good propulsion and some momentum for some bearishness. So right now, I'm kind of just waiting. Kind of just waiting for something to happen on Tesla. Alibaba. Baba's interesting. Baba, we're getting down to that $100 price range, and I just kind of bracket trade in Baba right now. This is a very, very strong pivot point at $99.57. So realistically, in my viewpoint, we have two choices. We can either wait for it to close and then take it bearish, wait for it to close, wait for the retest, and then take it bearish if the retest occurs, and just plain old wait. So right now in Alibaba, doing a lot of waiting. Doing a lot of waiting because the 105.52 is a bullish entry, 98.89 is the bearish entry, and from there I'm just kind of waiting. So those are both swing trades. We're just waiting on. Don't really have anything going on at the moment. El Pollo Loco, the crazy chicken. Kind of a nice little bounce today. Great gap the other day. Here was kind of that little retest pullback. And then today, in my opinion, if you're getting in on El Pollo Loco, the sentiment is a little bit more bullish than bearish. If we go back to the daily chart, look at the exponential moving averages, I think the 50 is kind of our next target, our next stopping location potentially. I'm going to go ahead and draw a line on El Pollo Loco. I think there's going to be some interesting stoppage potentially around 26.87. That's probably my ultimate target on El Pollo Loco. So if you bought the bounce, today was kind of the bounce from this little wave rotation. El Pollo Loco, look for them to have a gap. If they do, I'm not saying they're going to, but if it gapped below 22.55, there'd be a lot of trapped people. And I think that'd be a really, really good bearish gap to play if that indeed happened. Nice, Cheryl. Yep, so that's kind of my thoughts on that one. I guess we can look at DDD. I haven't looked at DDD in a while. DDD, ladies and gentlemen, hanging out. This is a good buying location, longer term, and that's really the best that we have for DDD. This is just kind of, you're out of support. We're probably going to accumulate down here for a while. We could obviously and absolutely continue lower, but it's at a long-term support. And if it bounces, great. If it doesn't, I understand. Twitter, still just hanging out. We talked about buying back in here. Could be a 2 to 3 month trade. So far, we've been in this one about, I don't know, half a month, maybe a month. A little bit of a pennant pattern shaping up on Twitter right now. And $37.99, if we break below that particular price, that is where I would buy a protective put if you're in a bullish trade on Twitter. But right now we closed above it, and we're still kind of retesting that breakout, and looks good. Looks nice. Prasad says, Twitter looks exactly like June 2014. Like this area, Prasad? Yep, I can see some similarities. I can see some similarities. Let's see what happens. 44.61 would be a really nice little target on Twitter to at least sell some covered calls or something if you're in a position at that point or that price. Cool. All right, so let's go update you guys on a few of the other ones that you've been requesting. That's most of the tech stocks. I think you guys are getting a good beat on those. If we come to Tiffany's, this was the gap from yesterday that a lot of people played so magnificently, and it just kind of continued to roll over today. As far as a retest, here's your support. Once it took out that support at about 87.49, the bottom just kind of fell out, and it traded down to about 85.62. I agree, 85.62 is a very, very good, solid support. If you're buying down here, you're buying low, selling high. Can it break that location? It could, because this is a really, really bearish gap. But granted, you absolutely can keep your eyes on Tiffany's down at this location and see if any trades stand out to you. Let's see if anything starts sparkling. Shh, that was stupid. That was dumb. Anyway, it is at a good support, but you really are trying to pick the low, trying to pick the bottom if you try to get in bullish. But I mean, bottom line, keep an eye on your hourly and watch for some type of hourly reversal signal. So for right now on the hourly chart, you're getting kind of a morning star. It'll be bullish above here. Stop at about 85.30. It appears that we might have a tweezer bottom. Nope, we're 3 cents away from a tweezer bottom on Tiffany's. So if you're playing this one bullish, that would be the tightest that you could play it. Morning star reversal off that support. Risk your 1R. Expect to get stopped out because you're really, really trying to pick the low. But if you don't get stopped out, it could work out in your favor very, very quickly. I mean, it is a retest on the swing trade level. So a trade back up into 91 is already a 3R trade. So, you know, just keep your perspective on that. But that's really what I got for Tiffany's. Sprint. Sprint's just kind of still hanging out at the moment. Hasn't really fully rolled over yet, but you did get a kind of a bearish candle on 1.8. So at the moment, with your exponential moving averages the way they are, you're kind of failing the 20 a little bit. But realistically, if we don't roll over from here, I think we'll trade sideways and probably trade slowly back up into the 50. But at the moment, Sprint really hasn't been doing, hasn't done much. I think if you're in long Orkin with a protective put just to protect yourself, I think that's very valid. I mean, if you have a target at 576, I think that's fine. So the sentiment was always, I mean, is bearish. You have bearish sentiment. These are some bullish candles, and bottom line, one of two things will happen. Either the rollover will continue, or it'll make a higher low and it'll bounce. We're literally at that location in time on Sprint where we just do not know. We don't know which one's going to do. Bollingers on Sprint, probably starting to get a little close. They are. So it looks like we're getting into a Bollinger Band squeeze on Sprint. This could be a fun trade. If it continues to trade sideways a little bit, maybe for another week or two, it'll pop in one direction or another. So at the moment, I think we just need to hang out. Be patient on Sprint. If you're in bullish, it could be a 2 to 3 month trade. We've been in it for about a half a month, and we'll see where we go from there. As an update, JCPenney got triggered in yesterday. Let's go to the exponential moving averages. So JCPenney got triggered in yesterday. I think we leave our stop exactly where it is. We definitely have some reversal candles shaping up for sure. If we go to the hourly, we got a little bit of a sell-off, but we are getting some buying pressure towards the end of the day off the 20 exponential. So my guess is, and what would be kind of the best case scenario, is if JCPenney kind of trades sideways in here for about another week. That would allow, on the daily, the moving averages to start coming and supporting the bullish move a little bit more. So if you give this one 2 or 3 more days, the 10 will be above your stop. Then the 20 will cross the 50, and then we'll be fully above all the moving averages. So yeah, I think we leave our stop and just kind of let this one hang out here for a bit. So JCPenney, I think we leave our stop in and just kind of do that. Orkin, I forget, I was talking about you earlier today. I forget where your stop is on Office Depot. You want to remind me? Jay says, is there any way that you could write about the lines what the dollar amount is that it corresponds to? I can't read it. I wish there was a way to make the font bigger, Jay. And right now in TradingView, there's not, unfortunately. But if there's any prices that you want, let me know, and you can ask me to call them out. Other than that, try doing full screen view. See if that helps you. on your end. It'll probably make it a little bit bigger. Ron says, could you talk about how and when you let your trades run once you reach 2R, assuming you're watching the trade? My Sonic trade closed this morning at 2R. Yeah, I can talk a little bit about that. I'll pull up Sonic in just a second. Orkin says stop is at 7-11. Cool, good stop. So Angie, not Angie, sorry. Orkin stop right now is at 7-11. His target's kind of up in this area. You know, we got a little bit of a pullback that we kind of figured was going to happen and was kind of needed to happen. Last time we pulled back, we bounced in between the 20 and the 50. I think that could happen again, where we trade back down to here and we bounce off the 20 or the 50. So Office Depot targets, he says, is 945. Sweet. I like where your stop is, man. 698 is a very strong resistance support level on Office Depot. So this was a retest gap. If we do actually trade back and we actually do retest and bounce, that could be a good buying location on Office Depot for those who are not in. If we come back to Sonic. So Sonic, Ron, very proud of you. Ron said that he is out at 2R on Sonic. Phenomenal. The best way to get a trade to run for you, Ron, is to exit a certain position at 2R. It really doesn't necessarily, quote unquote, matter how much you exit. As long as you do the same thing all the time and you become disciplined, that's really what matters. I've heard many people say a fourth. I've heard many people say a quarter. A quarter and a fourth are the same thing. I meant a fourth, a half, a third. Half is the more popular nomenclature for swing trades and day trades. Is exiting half of your position at 2R and then just letting the rest go with your stop. So, for example, on Sonic, Ron, let's say you exit your 2R position today. You exit half of your position and then you simply take your stop and you put it to break even and then see how much farther this thing can go. So you're still in half your position if it continues farther. So on the hourly on Sonic, beautiful gap. It really was, I mean, just gorgeous today. Phenomenal gap. And yeah. Does that help, Ron? I mean, realistically, that's kind of the best way to do it, is just have something at 2R, have something at 4R, have something at 6, have something at 8, and just have your plan from there. So at 2R, I take half and move stop. At 4R, I move stop. 6R, move stop. 8R, move stop. Or instead of a stop, you could also do protective put. You know, so to keep you in the trade a little bit longer. If it's a longer term swing trade. What is the next target on Sonic? Oh man. That's just such a beautiful trade. Let's do some fibs and find out. But I know it's kind of it's a semi-vague answer, but at the same time, it's very simplistic. 61.36 was a very good target today. So that's where Ron sold, took some of his 2R profit. Ron, I think it was a great trade on your part, man. You followed your plan perfectly. From here, Orca, next target's 34.21. We're going to need a pullback and a bounce before that happens. So if we do get a bounce, the bounce is buyable. So I will put in here, buy the bounce off the EMAs. I'll kind of leave that right about there. So this trigger, we can get that off the board because that's already triggered. So I get at this point, I guess, like I said, our stop, 30 and some change, 30.04. Ron says, I like buy the bounce. Beautiful. Me too. He said, yep, I exited half the first day and the rest today. Cool, man. I mean, made a great profit. I mean, yeah, sure, you could keep going up, and we never know how high it's going to go, any trade. You know, so our main thing is, what is our plan? Did we follow it? And if so, reward yourself. This is a really, really pretty gap for me today on Sonic. The moving averages are kind of high, so my analysis is bullish without question. So if we do come down and buy the bounce, we can just get back in again and just take it for another ride. But longer term swing trade, 2R, always good to take at least half your position off the table and then move your stop. But it's all about your plan. You know, at 2R you could just simply move your stop. And at 4R you could take half, you know, if it's a longer term swing trade. There's all kinds of schools of thought. It's just about whatever you like it, whatever you do, just keep doing that one over and over and over. Oliver wants to look at American Airlines for the retest. So this was the retest gap, and this is kind of the retest that it's happening as we speak in a way. So the hourly, we had some really, really interesting retests happen up here today on the hourly. So here's kind of a little bit of a fallout, and again, some bullish buying pressure. On the hourly chart, Oliver, let's look for a gap tomorrow. If we take out these lows of $50 tomorrow in American Airlines, Oliver, so if we start gapping down here, I think the edge will still be bearish. So we have retested one, so here's one of our opportunities. Let's see what happens again if we trade back up into the 20 and fail again on American Airlines. Trade into the 20 and another failure. So we'll see. So Apple getting some buying pressure, SPY getting some of that buying pressure. Cool. Like I said, that we should bounce. I mean, that's, you know, these gaps. This gap is a bullish retest gap on the market. And the last few days, we did do retesting. So if we do get a good bounce and get a good close at the end of the day on some of these stocks, I mean, it could, you know, it could be pretty. Patricia wants to look at CSX. Let's check it out, Patricia. Distribution phase expected. Definitely doing that, doing some distribution. It broke out of these this little upper trend line that we drew in. And really, it did kind of close below this support nicely, didn't it, Patricia? Earnings is coming up on kind of next week. Making some lower lows, lower highs. Ooh. I would love a gap tomorrow in CSX. Where's the long terms on this thing? We're below them. Let's go look at the hourly. I like it, Patricia. It looks pretty. I would love a gap down. Newsom would love a gap down. That would be a very nice retest gap bearish. Preferably below 33. Below 33. That would kind of be what I would prefer. Patricia, will that happen? I mean, I have no idea. But in my opinion, today is kind of the bearish confirmation. You know, we did not close below this pivot. That's what I would have liked to have seen. But with the candle sentiment that I'm seeing as of right now, here's your support. Here's the candle that confirmed the close below that support. Here's the retest of the breakout, which is needed because you got 1, 2, 3, 4, 5 black candles in a row. On the fifth candle, which was the bearish confirmation, it retraced, retested. You got your evening star reversal pattern. 1 penny away from a tweezer top. You got a evening star. That evening star triggered bearish today at 33.66. Exponential moving averages on the day we failed kind of 10 to 20. Yeah, I would be keeping an eye for a retest rollover about 33.80, Patricia. Tomorrow or Thursday, we trade into here and begin to roll over. My edge would be bearish, especially if we gap down. Cheryl, I didn't do any swing trade for DDD. I'd be happy to hop back over there and look at it for you. For me personally, DDD on a daily chart doesn't have any edge to it. It's just hanging down here at a really, really nice support. So here's the support at 29.43. Here's some of the resistance at 33.20. This is an accumulation phase. If you're doing a longer term trade, Cheryl, not necessarily a swing, but kind of like a buy and hold, do covered calls, own shares type of trade, this would be a good place to kind of buy it. And just have your stop or protective put below 27, and that's just kind of about it. And just walk away from this one. Maybe do some covered calls, but as a swing trade, I don't see a short-term swing. This would be kind of a longer-term play for me. Judy, TradingView, it is free. Yes, TradingView is free. So if you go to TradingView, there obviously is something that you can pay for, but it is free. You can just use it. No, you can use a 30-day trial. The 30-day trial, Jay, is the pro data, which people pay for free. But you can have a free option where you stay with free forever. You never have to pay for data. The 30-day trial is for the pro data, which is what I use, which is, if you're professionally day trading, you want to have good data. But if you're not in and out all the time. All right, cool. Okay, so the next 7 minutes, what do you guys want to look at for what's gapping tomorrow? What do we have on the docket, ladies and gentlemen? Steven Stecker's been waiting for that one. All right, I'm going to go look at those 5 then. Wells Fargo already looks bearish. A gap down on Wells Fargo is expected. That's just what I think. Hourly getting some buying candles. Gap below 51. Let me go to the daily. Here's your long-term moving averages as well. So you're right at the 200. There's better gaps out there for sure, but on Wells Fargo, there's going to be some support around 50. 50 and some change. A gap down is expected. If it opens below 51, and above 50, bearish retest. If it opens below 50, best gap and bearish retest. I wouldn't trade a gap up unless it gaps above 54.20. Only bullish gap I would play is above 54.20 because you have so much congestion in there between those two price points. So JP Morgan, kind of the same thing. It's going to be pretty similar. JP Morgan's at the 200 simple moving average now. Again, there's a lot of these financial stocks. They got to clear some pivots to be a good gap. So keep that in mind. JP Morgan has a much better pivot than Wells Fargo. Notice right here at 58. So that is a good pivot to clear on JP Morgan. A really good pivot. Phenomenal pivot, in fact. So we would really prefer it to gap below 58. And then from there, really next, kind of a best support is about 55. A gap down below 58 is a good bearish retest. I might play a gap up above. I want a gap up above 62. I would play gap up above 62. Okay, there we go. Save that chart. KMI, Kinder Morgan. Kinder Morgan, I have it as 121. Let me go to earnings list for really quick to verify. KMI. 121 after close. So that one might be later. And KN. Knowles. Knowles says 126. KN is 126. So that one might be later. And LLTC. Linear Technology. Okay. Linear Technology could be interesting. I got a great pivot that I want to take out around 43. Yeah, I'd prefer it to gap down below 43. That would be the best gap possible. Or one, at least one of them. A gap down below 43 would be a great bearish retest gap. A gap up above 47.25 would be good as well. So LLTC, so that would be for tomorrow, depending on how it gaps. So if it gaps below here, it takes out this pivot, that'd be awesome. If it gaps above here, it takes out that resistance, that should be pretty good as well on LLTC. Orkin, I didn't publish that idea. So the only ideas that you guys will get are the ideas that I publish. Otherwise, it's just my charts that's saved. So I didn't publish this one. I'm just putting it on my chart. So the only trades that you'll receive are the trades that we published the idea on. If I publish the idea, then you guys will get it. Brad does most of his publishing in the morning. That is correct. And Brad is the instructor at Real Life Trading. He said, but yours I really don't get. Well, I post mine mostly in the afternoon. So check your email. I posted, I think, 3 or 4 today. So you should have gotten those. I usually don't post any morning day trades. Very rarely. Because that's kind of Brad's. He wanted to do that. So I posted Monsanto and LinkedIn. Monsanto and LinkedIn. Those are the 2 I posted today. So feel free to check. All right, cool. Steven, thanks for the trades. For the gaps. Ladies and gentlemen, tomorrow will be a fun day. Weekly Wednesday. I love weekly Wednesdays. Weekly Wednesdays, we're going to be looking for call sales, put sales, credit spreads expire this week, maybe next week. We'll see. You guys are saying LinkedIn did not post. It definitely should have. Give me about 3 seconds so I can find out. Ideas published. LinkedIn right there. So that's weird. I don't know. Because it posted 33 minutes ago. Interesting. Oh well. Cool. Dale said Brad's doing a great job posting. He is. He is doing a great job posting. He's an awesome guy. Ladies and gentlemen, another amazing day if I say so myself. And it's amazing because you guys are here. That's what makes it amazing. Thank you for your energy. Thanks for coming in and watching and asking and participating. Your energy, I love. You guys are just absolutely phenomenal. Thank you so much, students from around the world. I'm going to see you tomorrow for Weeklies Wednesday. And until then, remember, love life, live life, and trade it. I'll see you guys tomorrow.